Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. So let's keep up with our gold analysis. As you can see, market shows even more quiet performance comparison to the forex market. So today, at least on the euro currency, we have some patterns to discuss, and actually we have some reasons to consider taking a long position. Maybe not on a daily, weekly basis, but at least for intraday purposes, for speculative trading. So a lot of options exist, as we discussed in today's video. On the gold market, we do not have this ability, because you can see the Monday session was mostly at the same place as the whole previous week, so market stands in a tight consolidation. We spent a lot of time to with the discussing of this phenomenon. So the reasons for that is very simple. That investors currently are not believe in a gold market. Despite all the things that we have, decreasing of the forecast of the gross domestic product in the United States, some selling and inflation, slowdown in China, poor non-farm payroll release, and in general, our statistics looks a bit worse than it was 1-2 months ago, and it's showing some deterioration in the performance of the United States economy. Even with this background, we do not see inflows in the gold. Which makes us think that investors mostly watch at the gold market in complex, so they do not pay too much attention to the terms when the Fed policy should change, but they're just watching at the point that it will have to change. So it will change at some day, and probably in some foreseeable future. This is the first reason. Second reason, gold just can't compete with other assets such as the stock market, which provides the passive return in way of the dividends. So that makes overall picture looks a bit, well, pity. So this is actually the result why we said in the weekly report that currently we do not see a really good background for taking the long position immediately. So maybe, especially after the sell-off that we've got here, it was relatively strong. Today, guys, by the way, we're coming to the CPI report, which could make another hit on the gold market. So, and from the technical picture and behavior on the daily chart, I would prefer to see at least the harmonic pattern to be at place. I'm not sure that definitely hand shoulders leads us to upward continuation, reversal, or something of that sort. Maybe it will fail. But at least having the clear pattern with the harmonic shoulders around 1760 area, that might be the thing that give us at least some background that we could consider, especially if on the bottom of the radar market will form some patterns that will let us to place relatively tight stops on the intraday charts and protect our position with the break-even stop later when the market shows some first upward bounce. This is the story that we would like to discuss. But currently, at this point, some moments exist that makes me stay aside from the taking the long position on the gold. First is, of course, CPI that we'll get later. But in general, if we'll take a look at intraday performance on the fall time frame chart, let's take a look at that. Despite we've got the grabber here, we have even some divergence. As we discussed also, here we've got the grabber that suggests theoretical taking out of this top. Maybe this will happen by the CPI, who knows. But in general, with this performance, take a look in forming with the flag pattern. Market shows, so we'll better to reshape a bit this flag. So we have new lows here. So market shows in general, let's take a look after the drop from the opposite border of the flag. Market stands very close near the bottom. So it even can't show some reasonable pullback even inside of the flag to reach the opposite border around 1810 area. So that makes me think that, well, it's very difficult to call this type of action as a reversal, guys. It would be better even seen on the hourly chart. So take a look. Previously already discussed the hand shoulders has failed here, that market could try to form, which is also bearish. And currently, again, this choppy type of action, it's very difficult to call as a bullish reversal, and definitely it brings no visible signs of the reversal and thrusting actions. I'm setting on the new direction. We see some churning around the support, so a lot of overlapping candles, long shadows, deep swings. So here, guys, I do not see any reasons that could tell us that yes, this is the moment for buying, let's go long. Personally, I'm not really fascinating with the buying gold at this point and right now. So that's our current position. On the intraday setups, maybe yes, for instance, we could get something of that kind today. Will be not surprised if we'll get it, something of that sort. Some intraday patterns exist, and you theoretically could consider it, right? So, for instance, we could get nicely looking Gartley's triple to sell pattern later in the session. Right here might be good opportunity to go short, maybe even based on this pattern for intraday setup. Maybe some other patterns might be formed. But speaking on the daily chart, what we have here, and in general for discussing of the long entry, well, currently I'm not ready yet. So I think that we should get some deep action. This is absolutely not inspiring me, the type of action that we have. And with the sentiment that we have in the gold market and potentially stronger CPI report that might happen, because we've got the baddest PPI recently, we've got the rising inflation even in a poor non-farm payrolls release 2 weeks ago. So that makes me just sit on the hands and wait for more clarity on the gold market.